Recording, Frank. So let me begin our presentation today by saying welcome everyone, and it's June 13th. We're here today with a wonderful mentor who's had many years of floor trading experience at the CBOE, Frank Fahey. He's one of our head mentors at discoveroptions.com, and I've invited him to give a real nice topic on married puts. The origin of this topic is thanks to a client of mine in London who's tuning in today as well. His name is Raj, and thanks to Raj, we're going to be doing a series, a unit right now on married puts, and also I have another client who is interested in having us set alerts, and so we're discussing how to set up alerts and make them trigger. And then if we have time, we're going to try and at least talk about OpScan and have a Q&A session at the end. So without any further ado, this is Karen Ray. I'm turning it over to Frank Fahey, and you're up on deck, Frank. Thanks for coming today.
Okay. Thanks, Karen, for having me. My name's Frank Fahey. As Karen mentioned, I am a mentor at Discover Options. I handle the advanced options strategies and trading plan, discipline. And that's my area of expertise. A quick explanation on who I am. I came down to the Chicago Board Options Exchange in 1985. I was a pit trader there for over 20 years. Really enjoyed it, and then my job disappeared. Tried to go over to the Chicago Board of Trade as a wheat options trader, and wasn't quite as successful. Part of it is I could not break into that pit and get on the trading ticket, which was somewhat aggravating. Nowadays, since everything's electronic, we can get on the trading ticket. So I've been trading forever. I do the same basic strategies you do. I trade for myself. I trade for other people. In addition, I use many of the same strategies I teach right now. In fact, all the strategies I teach, I use. And I'm aware of what's going on in these current markets. In addition, I use the same tools. My go-to analysis, risk management product that I use is OptionVue. It's a product that even when I left the floor, I never had anything as good as what's available now for you people. Today, we're going to talk about two discrete things. This is who I am. Hey, this is airbrush more than a penthouse centerfold. It's 5 years old, but so I've been doing this. I did, as it mentions here, I did the crash of '87. I was trading Rockwell when the space shuttle went down. I traded the dot-com boom. I had significant positions on 9/11, so I've seen an awful lot of things. In addition, I am certified by the Options Industry Council to teach at all levels of their options training courses. And I do stuff on behalf of, training on behalf of the ISE, International Stock Exchange, the BOX, the Boston Options Exchange, and the BATS Exchange out of Kansas City. Now, let's move on. One of my favorite sayings is chance favors only the prepared mind. So one of the things we want to make sure that we always understand is A, understand what we're trading, and B, understand the tools that we're using. And all very important. One thing, I sort of taken a scientific approach, because when I start doing things, it's what if, what if, what if. Now one thing, okay, here's our hypothetical performance disclaimer.
We need that.
Yes, we do. Any example I use is purely for teaching, okay? Rather than using stock ABC or XYZ or CWX, I'll use real underlyings. It might be Apple. It might be the SPX. It might be IWM, the Russell. I will use that. any position you see in there, I definitely not recommending that you do it, okay? What I am doing here is using those positions as merely an explanation. In addition, we don't have things like commissions, may or may not include commissions, and reasonable. If it does include commissions, they're reasonable. Interest rates, there's lots of gotchas, okay? So don't say, Frank did it on his seminar. Let's go ahead and do it. You know, I'll do the same thing. Bad idea, okay? It's sort of like deciding that we're going to drive a car like they do on car commercials. Generally not a good idea. I wouldn't have lived to do this. Okay, so now I'm going to talk about alerts. Okay, OptionVue allows me to do a number of different types of alerts. And when I say types of alerts, I'm not talking about the noise it makes or how it tells me. I'm telling you about the information that it is aware of and can communicate to us after letting us know. Okay, these are expiration alerts, okay? It's going to let us know, and I'll show you right here. We're going to go to OptionVue itself. You'll notice that here we have days until expiration. I can set up an alert which will tell me how, you know, when I'm within X days of expiration, when it's going to happen. This is information I need to know to, you know, I may not want to open a position. I may want to close a position. It's just, hey, Frank, wake up and pay attention to what's happening. In other words, when the mind's not prepared, it gives me a nudge. In addition, it can give me price and volume alerts. And the alerts are on items in the quotes display. Now, let me show you what the quotes display is. Here, we'll go to our main matrix. Oops, it's not the matrix. There. This is a quotes display. So I can set something and say, okay, let me know when the NDX, the NASDAQ 100, trades 2670. Now, I may not, just a lesson on alerts. When I don't have a tendency not to set alerts because I am in front of a trading screen from, 6 o'clock in the morning, Central Daylight Time, which is what we are right now, until about 4 o'clock, 5 o'clock at night. So in other words, I'm in front of the screen 10 hours a day. I have 6 monitors, and I'm always watching what's going on. It tends not to, I don't.
Frank does not need alerts. He is his own alert system.
I am my own alert. Thank you. But I will use alerts. If I am away from my desk, I have access via a laptop or my phone to my trading platform. But I will use alerts, and I will have them do it when I am away from it for the day. So, and here's a good process of doing the alerts. Okay, I can do news too. So if I want to know about Pacific Gas and Electric, I can click on that, okay, and it'll pull up Seeking Alpha or any other service I may have. I can have it pull up Seeking Alpha. I can have it pull up Yahoo Finance. I can have it pull up Google Finance. If you have a subscription to Bloomberg, it can pull it up and it'll automatically link. So this is the type of thing. So when I get alerts, I want to know. I can set those alerts to either percentages or dollar moves. So at times on stocks, you may want to go, yeah, if Pacific Gas and Electric moves $2 either way, let me know. And you can do this and go through and do it. Now, I'm going to go back. Okay? We can also have position alerts. So I can put in stops, objectives, meaning objective being the price. We can a specific quantitative amount, or I can do it on deltas. So let me show you how we would do it and just how easy it is to do in OptionVue. So I'm going to go back to OptionVue. And gosh, this is a powerful tool. I wish I had had it. You look at this and you go, well, how do I know what to set. Well, here we have an alarm bell, an alert, okay? Boy, and looking at this was quite a day on the markets. I started before the indexes trade, the SPX and the NDX, trade for another 5 minutes till 3:15. But here, we'll go here. This would be my alert manager. If I have scheduled alerts, I put in what I'm checking for, the status, and the date created. So if I want to start a new alert, okay, I can have triggers. And I probably should say, so the triggers can be the price or the volume, okay? And I can have it check continuously between, and this is my time, between 8:30 and 1500, which is 3 o'clock. Actually, I would make this
15:30?
Because, as I mentioned before, the market's trading until 3:15. Well, which is 15:15. I would make it 15:30, and I'll say, okay. Some people like to just check in the morning, okay? I have a continuously let me know. I can check for price, so I can have a symbol. In this case, we could go PCG, okay? Last, okay, greater than or equal. Bid, greater than, I should say greater than or less than. Bid, greater than or less than, and ask, greater than or less than, and volume, okay? I can do that and check all of these. I can check a position, okay? And here's the beauty of it. Here's a spread, okay? I can put in not only an underlying, a specific stock, I can put in a specific spread, okay? And I can have an alert, this one, which is an objective price, okay, which would be, hey, let me know when it's $1. An objective gain, okay, and that gain you can put in as a negative, and that can be done as a price or a percentage. And I could say, hey, I want to know when this one started off as about a 50 delta. I want to know when it's a 30 delta since I sold it, because if it gets to a 30 delta, I want to adjust it. All these different things I can do, and it's pretty easy to do. In fact, it's incredibly easy to do. I can also have...
Frank, could I interrupt for just a second?
Sure.
What if you've got 10 positions in that asset? Then how do you pull just one position into this little box?
Well, the reason I only have one here is because it goes into your trade log to get these positions. So I have an account called Sample.
Okay.
So I didn't create multiple positions in there.
Okay, but if I had multiple, would that complicate it?
No. Well, it complicates it just because it takes a little while longer to do it. So if you're ADD, you know, like me, I would prefer to have some sort of you know, Vulcan power where I could just think about it and have it appear. But
okay, I guess what I'm asking,
I have to use a keyboard.
Yeah. So it would actually, when you say get position, it'll bring all the positions that you have in the matrix in, and then you can click on each position one at a time and set up your objectives and your stops. That's kind of what I was getting at. Okay.
Yes, exactly. And I can do it by position or price and volume. Okay?
Okay.
Because
thank you, yes.
It helps a lot. In addition, I can set it here and have it send me an email. Display, and when it, here, I can put in multiple addresses.
Oh, that's
so I
good.
could have it send it to my phone, which I do have when I do it, okay? And if need be, like if I go on vacation, and I did this once and I don't do it anymore, but I could have it sent to my wife's phone. I could have it sent, you know, sometimes we all have worked in places where our cell phones don't work, so I might not be able to pick up my email, that specific email, but I can pick it up on another email address. Okay. And I can do it for either type, because sometimes people just want to know position alerts and they don't care about the price volume if they're at work. Okay. And I can have each one of these alerts can have a specific message. So I could say something like SPX July 1700 call 20 delta. I will know it hit the 20 delta. Now, one thing I do, and I found works, is when I set that, I may say 20 delta, but I'm really concerned about a 22 or a 23 delta. I give myself a heads up, and it allows me to react in a sane manner. If I set an alert, and this is all about discipline, these are the things that we can give you as traders. If I set it for 22, all of a sudden I'm going to have to move much quicker than I want to move. But I can prepare a trade in anticipation of having to execute it. Now let's stop for a moment and see if anybody has any questions.
Okay, good idea.
I think you can see the
oh, are you counting on me to do this?
Well, I'll do it. Okay, let's see. Does anybody have any questions? Okay, I can see the chat right now. Just type it in because I can't hear you. To let you know, when do I do this? That's a good question. Somebody asked, when do you do this? I do it either first thing in the morning, or I do it at, before I go to bed. And if you remember, and we'll look at a different one. I can do it just for the day, or I can do it for until, I guess, much like an order, I can do it good till canceled. Okay. In addition, I can have my computer make a sound. So if you'll notice, we have, it says here, OptionVue is able to remember a separate set of action details for each of the two types of alerts. Note, this does not make a phone call. It sends an email. But right now, all of us, generally have text and email access on our cell phones or close by. Okay, so I'm going to go, okay, well, please. Okay. Then I can put in different notes with every single alert, because I might need to remind myself why I'm going to do it. I may say, okay, buy this vertical here or sell this butterfly. I may be looking at, as a trader at times, I do not like to have the computer and my trading platform execute stop losses at all, because I find that, boy, I don't think I get as good of a fill as I do when I'm paying attention to it myself. So in this case, I'll pay attention and then intervene on the behalf of the computer. So this will take data, make it information, and then I can move forward and do the trades. Okay? So once a condition. So I can see PCG, I can go greater than 46.00, and you'll notice that it was, and I'll say I can do it continuously, each trading day, or every trading day. So, okay, it's going to say here.
Wants us
no, that's okay. I can. This is how easy it is at. Okay, up. PCG approaches sell goal. okay? And I can go like this. I have a wave sounds. I'm going to have it play chimes, if you'll notice. OptionVue gives me a number of different ones, and you can add your own if you want to. But I generally go with chimes because it's not quite as jarring, okay? And
so now you've set that whole thing up now at this point.
Yeah,
so
the whole time while
now
I'm
it comes
talking.
into the scheduled alerts. Now it's actually a done deal as far as having been set up by you. So now we're done. Okay, that was
now
pretty
we're
easy.
done. Yeah, it's real easy. And it's something I tend not to do. I don't have to do it every day. Literally, once I put it in, you know, I can go like this and say, suspend alert. Alerts are suspended, okay? I can cancel.
Or you can just cancel it, right?
Right. So it's easy. And you know what's going to happen? I put this in, and all of a sudden, I'm going to be walking around sometime in the next few days, and if this rally continues, and all of a sudden, I'm going to see, gosh, PCG trades more than 46. What am I supposed to do? So that's where we are on that.
So was that answering everybody's questions then so far on this? Pretty much? Oh, there's Norm.
So, pardon me?
Oh, Norm was asking some kind of a question. I don't know.
Oh, I'm not getting Norm. Seeing Norm.
Oh, okay.
What is Norm
was
asking?
saying, are they all live alerts? And yes, they are.
Oh, yes, they're instantaneous. Let me highlight. You need to have OptionVue up and running for these alerts to take place.
Oh, that was the question. Yeah. Okay.
You have to, it's not going to. It's not a background thing because, quite frankly, it needs to be getting number one for prices. The price feed is there.
Right.
To understand.
That makes sense. Yeah.
To get delta, we need to have the price feed plus the model, whatever model Len is using or has developed. I shouldn't say Len, but OptionVue has developed to run it, or to calculate delta. So we have a number of different ways you can slice and dice the delta is with everything in OptionVue. There's many ways.
I would think too, Frank, that this works like remotely because I've got my laptop at home, and then I've got my desktop here. As long as I'm if I wanted to tap in, let's say, to my laptop, I would still be able to, I think, to see the alerts trigger.
Well, the alerts, it's going to send me an email. So once I see that, that's fine. And I don't place my orders through here, okay? I use a couple other platforms to place my orders. Now, I know that at some point there are some sorts of interfaces between us and other trading platforms, but they do not execute the trades. They do not do automatic trading for me. I have to do it. But yeah, they'll give me the information. And so, anytime something's going on, I want to know what's going on a stock. I can sit there and say, okay, what is going on? And so that's where we are right now. And you'll notice I have a whole laundry list of things. And this is eminently modifiable. It's just wonderful. And
Frank, we had a question from Rob Long saying, please go through the procedure for setting up the delta alert for that spread. Setting up the delta. He said he wants you to go through the delta alert and set that up real quick.
Okay. Now, and one thing I want to mention is, and I think we'll notice here, let's see, new alert, type of alert. We're going to do a position alert. We'll get a position. Okay, I have that. Okay. Type of position. Okay, objective price. Here we have delta.
There's delta. Okay.
Okay. So if and I'll show you something here. Let's see. I'm going to move this. I'm not sure if it'll allow me to do this. That's a spider position, if I remember. I'll click on this. Here, I'm going to cancel. And we'll look at this position here. Okay, this is my spider position. It's a July position. This is a different position. You'll notice the reason it didn't pick this up, because it's a trade. I have not converted it from a trade I'm looking at to an existing position. But here,
good point.
when I click on this, it says, hey, this is the trade you have, a 163, 168. The delta on that is 196.4. I'm short, okay, or 19.6. So it's 196.4. I may want to know when it is short 300, okay? So I'm going to go back. I'm going to click on this, and it works conceptually much better for me when I can look at what I'm doing. Set up a new alert, position.
Get position.
Yep, see, I zone out. See when I highlight it? It says okay, okay, so that's okay. I want delta, and I want a delta greater than, I said 300, so let me know when it's greater than 290. Okay?
So we use a positive 290, not a negative.
That's a good point. See, please complete it. Gosh, okay, 2. There. See, this
that
saves
just filled it in.
Yeah, it filled it in for me. And, you know, I could go like this too. Frank at okay. Or if I'm working with a student, if I'm mentoring somebody, I might say, okay, Norm, let's put it in like this, and we'll monitor it. And so that is part of the, okay? So, and then I can test send email. Email was sent.
Oh, good.
Right. And so, I mean,
now,
this is...
So hit OK, and then let's see it say.
No, I'm going to put my chimes in.
You're going to do chimes in.
Oh, I have
Okay.
Yeah, there it is. No, but I mean, so that's in case I'm paying attention, because let's face it, I could have, underneath this, I have my presentation, okay? So there's my sound, okay?
So now it added it to the alerts menu at the top, which is great. Now you've got 2 alerts set up.
Right. Okay, now if we close this, okay, and I can put in that I have alerts there. So, I mean, that's what I do. You know, there's...
Rob's got another question, which I can answer if we don't have time, but it says, how do you pull the two legs from the T-log status, couple them, and then set the alert? So if you've got 2 separate legs from 2 separate positions that aren't a spread, is what I'm understanding that to mean, like in maybe 2 different months, maybe you're long a call, long a put or something in 2 different months, and he wants to couple them and then set the alert. So
well, I could go to, I could put something in here. Okay. So you'll notice here. New alert. Okay. Wait, come on, Frank. New alert. Action. Why am I having a... Oh, duh, Frank.
Position,
okay.
Yeah. Get position.
So that,
there you go.
I know, yeah, but that's the position I had before. If I go in T-log, you can, I believe it's this way. So we could go A.
July. So this is, you went to July.
So we can do that. And that's the SPX. Okay. SPX. Let's see. That's
So that was the July.
Yeah, the SPX. New alert.
Position.
Position.
Get position.
It's not getting it. It's not hard to do, and I trust me. As I said, generally I'm only looking at one thing there.
You don't have the position in the existing position field in the July, or I don't see it anyway. Plus, can you click on the top section?
Yeah, I do. They're right there.
Okay. Click on the header for July and just see if that...
Okay. No, let me think. Oh, gosh, Frank, sometimes I amaze myself. Jeremy's my expert on it. This is one of those things where if you have a problem doing it, rather than spending half an hour muddling around, get a hold of Jeremy or Karen or me, and we'll figure out how to do it in moments, okay? And
yeah, just click on that. There you go. Okay, I think that's the answer.
We'll see.
Okay.
I don't think it is. For some reason I don't, but
okay.
It means nothing.
Get position.
Yeah, get position. I'm doing something wrong. Trust me.
Yeah, that's not it.
And I don't know. This is somewhat aggravating because it's the type of thing that when I do it, it comes easy. But I'll tell you, this is so powerful. Just the whole laundry list of things that allows me to slice and dice makes a huge difference.
Let's move on. Oh, I know. Rob says grab it from the status. Okay.
Oh, duh.
Yeah, grab it from the status. That's
See, here's there.
There it is.
Okay. There it is. So I go here, and I have a condor here, or I have, different positions. And you'll notice, here's what I did. Duh. When I put the A in there, that's what made it that way. So I go this way. New alert.
New alert. Jeez. Position. Get position.
Gosh.
Oh, wow. Yeah, and then we highlight the one we want.
Yeah, that's it.
That's it. Thanks, Rob. Yeah.
So I can get almost anything. So I have Apple Common Stock here,
Oh, that's cool.
Objective price. Let me know when it's close at 435. So, hey, we'll go 460. Okay, objective price, and okay, and it's gonna let me know.
We all got that one together. That was a group effort.
Yeah,
cool.
But I mean, it is so powerful, and so I can peel out things because here I knew there was something. This allows me to make trades different. Okay.
To group.
And so if I can go like this, B, B. Now these are going to be paired together. Grouped. Okay. Spread. Okay. And so that allows me to do it a number of different ways. Okay.
Yeah, that's awesome.
And I'll go back and forth because you might want to price an iron condor and have all four legs with an alert, and then you're going to want to go back and have all four, each leg, perhaps, each vertical. Okay? So I guess now we can go on to...
Yeah, I think we should move along to married puts.
Yes. Let's find out where that is. Types of alerts. Okay, married puts. Okay, what is a married put? It's an option strategy. Now, this is not quite often, generally, and I won't say never. It's a type of, it's a strategy where somebody already owns stock. And when I say an existing long position in some sort of underlying, and it could also be an ETF or an index. It could even be corn. I mean, these basic strategies work across different sorts of products. So you'll purchase a put in the same underlying to protect against a decrease in the price of the underlying. And what this does, and I'll go through and show you examples, it establishes a floor limiting your losses while still allowing upside gains. So, I mean, we've had things where, gosh, the NDX has, there was 2 weeks ago, I think it was at the beginning of the week, and I heard that the NDX had set a new intraday yearly high for 19 straight days. Well, if that's happening, then you have individual stocks. You know, you may not want to sell out of it, but you may want to set a price where you do get out, because you don't, I mean, for example, the Nikkei 225, it's down, what, 45%? Or I was up 60% a week and a half ago or 2 weeks ago, and now it's only up 16%. So, but upside profits, okay, will always equal when we put on this trade, okay, the gain in the underlying, or the underlying gain, less the cost of the put. So let's look at some of this. Right here, I chose Apple, and it's because it's all a stock we know. So in this case, I'm saying, hey, I have 500 shares of Apple, and I'm saying I bought it at this price. I didn't go into, we have something called Backtrader that lets me recreate something that goes on in the past. But I'm going with today's basic prices, okay? And when I did it, it closed probably 50 cents higher. And so I bought 500 shares, requires this amount of cash requirement, and it has a delta of 500. In other words, it behaves like it's 500 shares of stock. Now, OptionVue allows you to do risk analysis, okay? And I can step through dates. I can have a projected date. This is, you know, how it looks. The original requirement, this is a 50% margin. But this is how the stock's going to behave over time. And price down here, okay, and this is the vertical is dollar profit, and we also have percentage profit. Now, I always look at dollar risk and dollar reward, because if I take care of these numbers over here, these numbers, the percentage rate of return takes care of itself. Okay, now remember, a married put is long a call and long a put. Okay, so what I did here, you'll notice I highlighted this. This allows me to look at just the put. I still have the stock there, but when I analyze it, it's only looking at this put. And so this is the great, how would I say, the gross cost. So I paid, you know, whatever the price was at that time, and this is what I paid for it. Okay, and it has a delta of minus 176. Now, this is the beauty of OptionVue. So I look at this, and this is what just plain put would look like, and this is what the risk graph, the risk analysis, would look like. How it behaves over time, okay, and this is expiration here, and price of the underlying. And that gives me that. Now, we'll look at the married put. And so you'll notice that I have the stock, long the stock, and long 500. Now,
no, you're long 5 option.
5 options, I'm sorry, psychologically. Gosh, I need you to, at times my brain goes so much faster than my mouth. Okay, so, and if we look at this here, this is my maximum loss, okay, is In this case, it's 99.30. And I picked the July 9.25 puts, 4.25 puts. I just arbitrarily chose $10 below where it was trading. Okay, so this is how we look here: $9,000 maximum loss from where we are today, and we still have profits to the upside. Now, standing by itself, it means nothing. But OptionVue has, gosh, and this is something I use all day long. They have something, see this button right here in the upper right-hand corner? It says superimpose. It allows me to superimpose the trade of just the long stock versus the married put, and that's the red. If you'll notice, I'm only making, oh gosh, about $4,500 less on this.
But look at the downside.
The downside. And so what happens is, if you had something like this when Apple took that tumble down from $700, this would allow you to protect yourself to the downside.
Tremendously,
okay, and what people at times will do is it goes up, they'll walk up the puts, and you end up giving away some money. But I mean, I had a customer that did this in gold and silver and got out at an average price of about $46 per ounce. And
wow.
Yeah, well, but this is using a tool, and options as a tool. And it's really hard to assess the viability of that tool without something like OptionVue, because this way I can compare one versus the other rather than flipping back and forth between, okay, just a put, just the stock, you know. The married put, that tells me, okay? Now, does anybody have any questions about that? Oh, geez, Frank.
Nothing new that I've seen yet.
Okay, Raj. Oh, he said thanks. Okay, I'm sorry. Okay. Oh, somebody, here's a question. Sorry, while making notes, I missed how you got the 500 shares. I just put in 500 shares.
I'll show them how to do that in the common, the area in the common. You don't have to go back and do that right now. I'll show them that.
Okay.
I'll show them that privately later.
Okay, now I got to get back. Let's see.
Any other questions? I don't see any other ones. I guess we're good to continue, Frank. Go ahead.
Okay, well, I'm going to do something here. I'm trying to figure out how I go backwards. Technology is pretty brutal on me here, so...
That's okay. I think you can just go to the lowest common denominator. I want to know what this is all about.
What I was saying here is there's something called put-call parity, and it allows us calls and puts and stock have a relationship. So stock is, the price of a stock is always equal to the call minus the put at the same strike price, and you add the strike price into the calculation. Okay, this is a basic thing, and you can get more involved in saying, well, gosh, I have a cost of carry if I own the stock, and I have a dividend if I own the stock that I get, or if I've shorted the stock, I'm going to have to pay a dividend, and there's the problems of exercise and assignment, and it seems overwhelming. But if you work with Ken Dole, Steve Papali, and myself, it's not quite as overwhelming. One thing for those of you who have not had mentoring, we will teach you the language, which is new, and it's almost like having a native speaker. We'll teach you the concept. You have a first-class tool, and then we teach you some basic strategies and help you develop a critical mind. And you'll find that after going through training with us, you can carry on the conversations in the stocks. But here, so if this is the basic relationship. The stock is equal to the call minus the put. okay? And if you look at this, if you look at stock has a delta of 100, if you go back and look at the delta of the call, which is it's how much it moves in relation to a change in how much its price changes in relationship to the price of a stock, and the delta of the put, you will find out that the call and the put will always add up to 100 or a minus 100. So long stock is plus 100. It has that delta of 500, remember, on the apple. This will have a delta of 99 or 100. There's always some rounding errors. But if you remember, a married put is a stock plus a put. Well, if I add a put to each side, remember our basic algebra?
Mm-hmm.
You get stock plus a put is equal to call. You end up with that.
I got you. Okay.
Oh, my gosh.
Mm-hmm.
Look at this. I'm going to show you something here. Well, look at the same delta. Look at the delta here is negative 35.3. So if I sold one of that, negative 1 times that's 35.3, and that's the delta. So I'm guessing the 425 call is going to be around 65. There, 64.9. So that total is 100.2. And that shows us that relationship, okay, if it makes sense. And that's called put-call parity. Well, okay, and this is something where it helps, well, the computers will keep these prices in line. They're not going to let much get out of line, because otherwise they're going to send off a barrage of stock orders and option orders to get everything back to that mathematically balanced price, which we call in line, okay? So, gosh, I never saw this down here. Okay.
What didn't you see?
These little buttons down here where I can move it. You probably don't see it. So this is what the call looks like. I bought 5 of these, okay? 64.9. Now let's see what the risk analysis is. Now one thing I always do is I always do the graph. And the reason I do it is I'm a visual learner, and I can tell if I've made a mistake, because the more complex an order gets, the more important this is, okay, that I know what I'm doing. Because quite often what I will do is on a complex order, I'll copy from here this to my trading platform, you know, and so it doesn't matter if we use Options Express, TradeStation, Interactive Brokers, Thinkorswim. Gosh, there's so many. Options House, there's so many platforms. So I'll sit there and copy it. Well, if I've made a mistake, this will not look right, okay? And I'll know immediately that I made, yeah?
Yeah, can I just interject that, you know, if a person's using Options Express or Track Data's brokerage, they won't have to copy anything. It can just go automatically into those platforms with the trade button at the top of the top row of buttons. There's a button called Trade. So I just wanted to interject that real quick.
Well, that's really good. Here, and we'll show you where that trade button is. Right there.
There it is.
That'll transfer. So, and that's good. And I think you're working with somebody else right now, but this is important to people to be able to use that, okay? So, put call parity, common denominator. So if we did a call, this is what the risk analysis or risk reward looks like. But hey, let's look at that married put that I did before. This is superimposed. The married put superimposed over the long call. This is visual confirmation of the equivalency between the two strategies. So, you know, I've given you a taste of some of the things you'll learn in mentoring. Given you a taste of the strategy, the married put. went over the alerts, and thank you for whoever came up with the fact that I have to do that out of status and not, you know, gosh.
That was Rob, yeah.
That was just a wonderful bit of advice. Jeremy and everybody else, thanks you on that. So I'll ask, I'm here, I'm in no hurry. I'll answer any questions you may have.
Yeah, this is a great time to ask questions, Raj and Rob and everybody, Norm, whoever else is on right now. Let's take advantage of Frank's expertise and some trading knowledge he's got, a ton of trading knowledge. And by the way, I just wanted to say something here while you guys are typing in your questions. We do have a summer special right now on the mentoring course, and it's $1,000 off. We've never had a special discount in over 2 years, Jim Graham has told us. So, you know, if you want to take advantage of Frank's knowledge and expertise on a one-on-one basis, this is the time to get signed up and get going and take these courses. We've got course 1 with a lot of the things that we're talking about today with the covered calls, married puts, campaign covered calls, which we explain in the course. And then course 2 is actually directional trading with spread trading. And course 3 is the iron, condor, butterfly, what we call the income producing strategies. And you're going to learn in terms of all of these different types of strategies and back test them yourselves during the course. So it's a great opportunity to take advantage of a discount right now on those courses. So let's have some questions, folks. I don't see anything. Do you, Frank?
No, I don't. But one thing I would like to highlight, and this goes for any financial trading and whoever you're talking to, there is no such thing as a dumb question. I stun myself at the things I forget at times. And I've done this constantly. And I'll get turned around and it's like, okay, if I have theta, if I'm plus theta, does that mean I have money coming into my account, or am I paying it? And I mean, I will call up people and ask them questions. Guys saying, hey, I'm turned around. I know that I'm confused. Point me in the right direction. Because sometimes we're dealing with so many numbers. Karen corrected me, but it's almost like somebody spun me around. And it's like playing pin the tail on the donkey, and you know, God forbid you get too dizzy. Okay. So, and that's what the mentors are for, and that's what this tool is for. Is when we get spun around. Let me look at it a number of different ways. I can look at it graphically, or I can look at it with the Greeks down here on the bottom.
Okay, we got a question. Yay.
Sure.
Okay, when having a married put on, does OptionVue tell us, wait a minute, does OptionVue tell us what the risk is in a trade?
Yes. Well, it'll tell you what your, here, we'll go back. We'll go back to the married put. This, and actually both of these two, this blue line here is the risk, which is below the horizontal, and the reward, which is the blue part above this horizontal, which is $0.
Profit.
That's the profit. So the profit's the reward, the loss is the risk.
And it also points out along the horizontal axis at each price point, if the stock goes to that price, what kind of profit on the right-hand side or loss on the left-hand side are you going to have in actual dollars or percentages? Right.
So on the married put, Raj, this red part here, the red line, is the married put. You'll see, and gosh, they let you pick out colors too. I don't do that because every time I pick out colors, they're like too bright. I go, oh, geez. But I mean, this is it's customizable in many ways. So here, long 500 Apple and long 500 July 425 puts. Okay, that's the red. So I can sit here and say, hey, the stock's at 435. The put is at 425. And so this is a 425 put. This tells me what my maximum risk is. So Apple could go to 0, okay? And my 500 shares geez, Frank, we'll go backwards. I wonder, oh, geez. I have a pen?
Oh.
Why didn't anybody ever tell me? This distance between there.
There you go.
And there, oh gosh.
That's neat, yeah.
Okay, is my maximum loss, even if Apple goes to 0. Well, if Apple goes to 0, I'll tell you what our maximum loss is. It's this, 113, because it's figuring a 50% margin on long stock, times 2. So that'd be 227, 198. Okay? So,
okay, yeah, so we got that one. I don't see any other questions.
No, but I mean, if anybody has a question for me, feel free to send that question to Karen. I'll get back to you within a day or so.
Oh, Frank, you know what? I just thought of something. OpScan. We were going to talk about. Oh, we were going to talk about OpScan for a minute.
Oh, right.
Remember?
Okay. Yes.
Oh, and now Raj has one more question.
Well, okay. Okay, I have a trade on, a married put, and then I want to see what rolling my put up would do. Am I able to do that and see what the graph would look like? Well, hey, let's see what we can do.
The answer is yes, we can.
Yes.
But we'll show you.
I'll show you.
And then we have to talk about OpScan real quick, too.
So we'll go back to our Apple. And we can actually do something called back trade, which would allow me to go back a month or a year and create a campaign on how it would look. But somebody's going to have to tell me where Apple is here.
By the way, Daryl is asking, are you only showing expiration values? We can show any date in the future, Daryl.
Sure.
It doesn't have to be expiration. OptionVue shows 5 timelines in the Analyze screen, but we can choose any time frame we want. OptionVue takes today and expiration and then divides the 3 extra days if we have 5 days, in equal intervals, but we don't have to use those. We could do anytime.
At expiration, but I can go 1 day. Okay, and you'll notice here there's this saying that's T plus 19. That's 37 days out.
So it divides those
so
time
I can
intervals.
get 5 in there. And I can do things like move volatility and make it go up 5 points or down 5 points. There's lots of things that it allows me to do. It'll show break evens. I mean, it gives me an amazing amount of things. I can step through volatilities. What this
rolling
does,
out.
the addition, rolling out. So, for example, I might say, hey, I'm going to sell this. Okay.
So this is our new proposed trade, Raj. This is how we do it.
And we might do this as we're getting close to expiration, at day 35 or wherever. Or if there's a movement in the stock, so we'll say it went up. Okay, and I want to buy 5 of these.
So we close
You'll
the
notice
existing.
I have these. Okay, which is 450. You'll notice I have existing trade. That trade number would just have this trade and that trade in it. Should be 5 there. Okay, and you'll notice it comes up with a delta on that, or both. So I can analyze. First thing I would do is we'll analyze this, and I'll get the lines out of the way because when we start superimposing, we'll just put 2. And I'll close, and then I'll go both and analyze, and then I superimpose, and you can see how it changes it. But what's probably more important to you is, okay, fine, I'll look at buying the 425. Here, allows me clear trades. I might want to compare when I do the married put. I might want to look at what would it look like if I had bought the 430 put, or if I bought the 420 put, or if I bought the 425 put. Excuse me. We could compare those and look at them as separate trades and compare them to each other. Okay? When putting the Apple stocks in, it puts the net requirement down as the Reg T requirement. Yes. Are we able to switch to portfolio margin requirements? That's a real good question. No. And here's part of the problem. It is hard to tell what other people's portfolio requirements are. Now, there isn't a way, gosh, I once sat with Steve Lentz and we went through trying to figure out what the portfolio margin was, but the gotcha was that they only gave us a subset of what we really needed to calculate that margin. And so
it would be quite unwieldy to do that because there's
it is because we don't know.
Right. Okay.
I mean, there's one company where I asked them, and they said, "Well, that's you know, that's a secret." And I'm going, so is my margin requirement a secret? I'm just trying to figure out how you calculate it. No, that's proprietary information. We're not going to tell you. So, but yeah, that's a real good question. But yeah, I've tried to do it myself. So, okay, that sounds good. Now tell them about, we have something called OptionVue, which allows us to search the subset of stocks and options using specific parameters. You know, I'm looking for something with a volume greater than this and a implied volatility greater than this, and I'm looking for this relationship between the stock and the underlying. And it'll come up with a list. I would not say they're recommended trades.
Can you just click on the OptionVue button just to show them there's 13 built-in formulas, and then you can customize formulas till you're blue in the face. So you could have 300 formulas, you could have 500. It's up to you however many you want to custom build. But the main thing
here's one.
Yeah. Let's
optionable stocks trading higher than $100 with an implied volatility of 25, greater than 25. And
we have to run the report. Let's see, is that it? No, that's from January of 13. We got to run the report first instead of viewing it. Let's go back to OptionVue.
Oh, that's 125.13.
Yeah, let's just go back to the OptionVue button and then run the report.
There.
Hit the go. Okay. Hit the go.
Oh yeah, duh, Frank.
There we go.
Okay.
Got to run it and then we can view it.
Right, and then
it's viewable by date, which is the last one.
Yep.
There we go.
And there it is.
Then we can actually kick all of those over into the quotes display and look further, but the list is here already.
Right, so it allows me to look at these stocks. Because some people, quite frankly, like to trade something with a higher volatility and a higher price. Okay? But I mean, if you look at this, if we go close and go back to OptionVue, okay, overvalued, high-yielding naked puts on upward trending stocks, first month, second month, or third month, you know.
Oh, there's just tons of them. Yeah, there's
right.
It's unlimited.
And you'll notice I have more than 13.
Yes, you do. And what I wanted to say to everybody who's tuned in and those who tune in even after the fact is that if you give me a call, I'm going to send you a custom formula that Frank and Steve Lentz are going to develop right after today, and they're going to put together a married put scan for us. I think you said you would be happy to do that, right, Frank?
Yes.
Yeah,
Steve
okay.
And Steve and I, of course, will...
for different criteria. And Robin's wanting it to scan for tight bid and ask values. Does it do that? Yes, you can do that.
Sure.
So we will try and we will get a formula together, and then I can send it to whoever requests it. You could either call and ask for me, Karen, or you could just email me, Karen@OptionVue.com, and I'll send that to you once we have that finished. Then you can have OptionVue just go out every day and scan for these automatically to come up with some good possible candidates. So that is kind of the teaser at the end here that we wanted to, for everybody who's hung in here for the whole hour, at least they get a reward, right?
Right. No, and hopefully they've learned something. I mean, one thing I found about options trading is rarely do I walk away dumber than when I came in. Because at times I'll sit there, and I've sat there and saying, oh, this is BS. And it forces me to, I do. I've heard people, and you go, well, this doesn't make sense based on my experience. And sometimes I'm even wrong because I'm misunderstanding. You know, it's a prepared mind. So I'm always looking for new ideas and moving forward.
Yeah. Well, I've learned some things, of course, too. So this is great for all of us. And I guess we better wrap it up, Frank, because it's been more than an hour here, and I'm sure everybody's ready to put some of these trades into their OptionVue software and test it for themselves.
Okay. Great. Okay. Okay.
All right.
Thank you, guys. Thank you so much for coming, and really check out this software. The power of it is amazing. And what it's really good for is it's not so, it will help you make money, but the difference between a winning trader and a losing trader is knowledge and the ability to take losses and to avoid losses. So being able to define the risk versus, you know, the reward really helps. So if we go back and we look at that trade again, okay? Gosh, Frank. This tells us, I mean, hey, I'm avoiding a loss if we tank. And I'm only giving up $9,000, and it's like only $9,000. I'm still making money to the upside. So thank you very much. I'll let Karen close things. Goodbye.
Okay. Thank you again for attending, everyone, and we'll talk to you next week. And call or email me or Frank, preferably myself, and then I can direct it to Frank if need be with any further questions that you guys have. Thanks a lot. Bye-bye.